Hey everybody, welcome to the walkthrough for Chapter 6. Chapter 6 covers investing and financing activities. So if you remember back to accounting, that means the purchase of large assets, long-term assets, such as vehicles or equipment or buildings, also the purchase and sale of long-term investments and equity transactions will also be covered. Things like the owners putting money into the business. And maybe paying out dividends to the owners, those sorts of things. We'll also look at long-term debt, like taking on a long-term note, either for cash or to purchase an asset. So let's just go ahead and get started. So I am going to start on the fixed assets section, page 117. And what we're going to be doing is recording the acquisition of fixed assets. And I've noticed that this instruction book likes to use sort of a check-based system. Like, in other words, you kind of acquire everything by writing checks for it. And that there's other ways to do it, but that's how they do it here. So it's fine. So I'm actually gonna skip down to number 3. The steps 1 and 2 is just getting this sample company file open. So for step 3, we're going to click the new icon and we're going to click new check. So we're telling QuickBooks we're writing a check. And then from the payee drop down, we're not going to use one of the existing payees. Instead, we're going to tell QuickBooks we're adding a new one. And we're going to call this vendor Sunset Auto. It's already selected as a vendor. So we'll hit save. And so all we're doing is we're creating a new vendor right here from the check writing system instead of having to go to vendors, add them, and then come back here. All right. So step 6, accept the given payment date and check number. So we just don't have to change anything. Step 7, type truck : original cost in the category column of line 1. So here we are on line 1. We'll type truck : original cost. So this is saying this is the cost of a truck that we're recording, and we're going to type 2,500 in the amount field. That's step 8. And so this entry will tell QuickBooks deduct $2,500 from our checking account and then record the purchase of this asset called truck in its original cost account for $2,500. That's what we're telling QuickBooks here. So we're going to hit save and new. This is step 9. And now we're going to write another check to a payee that's already in our system called Tanya's Nursery. Let's see. We're going to go to the category box and we're going to add new, meaning this is a new category that we're setting up in QuickBooks. And for the account type, we're going to select fixed assets. This is step 12. And then under detail type, we're going to select machinery and equipment, which is step 13. Step 14, we're going to leave machinery equipment here as the name. We're going to put a check mark here in track depreciation of the asset, but we're going to leave the original cost and depreciation blank because I think we're about to hit or add that original cost. So we're going to hit save and close. So that was step 14. So we're still in this check. We selected machinery and equipment. And then we're actually going to change this to machinery and equipment : original cost. So what we're doing is we're telling QuickBooks this is the original cost of the equipment as opposed to any depreciation on the equipment. We're going to go to the amount line. We're going to type 1,000. So what we're telling QuickBooks is deduct $1,000 out of our checking account to purchase an asset called machinery and equipment original cost. So step 17, we'll hit save and close. And that will do it. We've now purchased 2 assets. The first one called truck, and then we recorded it in the original cost sub-account of truck. And then machinery and equipment, we've recorded in the original cost sub-account of machinery and equipment. All right, so that ends the fixed assets section. So now we'll take a look at the long-term investments section of chapter 6. And so I'm just going to start in on the steps. So we're going to continue where we left off. That's step 1 in long-term investments. Step 2 is we're going to do new, and we're going to add another check. And again, it's a different payee than was already in our system. So we're going to click add new, and we're going to call their name Scottrade. They're a vendor, so we're good. And then we're going to hit save. So that was all part of step 4. We're going to accept the given payment date and check number. So step 6, we're going to add new from the category list. So we're adding a category we don't already have in the system. And this is going to be in other assets. And it's going to be an other long-term asset. And we're going to name this other long-term asset investments. So that was steps 7, 8, and then 9, where we're calling it investments. I'm going to hit save and close. We've now added that here. We're going to type the amount, $3,000. Whoops, I accidentally collapsed that. There we go. So again, what we're doing is telling QuickBooks to write a check. We're writing a check number 73 for $3,000. And where's that going? It's going into our investments accounts. We're purchasing long-term investments in our Scottrade account here. We're going to hit save and close. And then we're going to click the gear icon and click sign out to reset the sample company. I actually don't typically do it this way. In fact, I don't even see how it's set up to do that. I sign out here by clicking on the little R. It'd be an M if it was me, but this is the sample company. And I click sign out. Okay, next we're going to look at equity transactions. So that's recording common stock dividends, owner investment, and owner withdrawals. So common stock is what we call it in a corporation when the owner invests in the company. If it's not a corporation, like a sole proprietorship, we call that an owner investment. And then also a dividend is when money gets paid out of the company to the owners in a corporation. And if we're not a corporation, we'll call that owner withdrawals. So it's the same idea, but they have different names for it, depending on if you're dealing with a corporation or dealing with a non-corporate entity like a partnership or a sole proprietorship. So I'm on equity transactions in chapter 6 in the book, and I'm in the section that says to record the sale of stock and payment of cash dividends in the sample company do the following. So step 1 is to continue where we left off. If you remember at the end of the last section, we had to close out, and now I've reopened it to my sample company file. And I'm going to click new. And instead of adding a check like I had before, I'm going to add a bank deposit. So now I'm telling QuickBooks instead of a check, which takes money out of my account, I'm adding a bank deposit, which is putting money into my account. And we're going to add new, so that was step 2, hit the bank deposit. Then we're going to go to the drop-down list of received from. So not select payments included in this deposit. This would be payments that we've already received, but we want to mark now as being deposited. Instead, we're going to be coming down here where it says add funds to this account. I'm going to hit add new, and I'm going to record this as WB Investments. We're going to make sure it's recorded as a vendor, because typically when we hit deposit, we're assuming it's a customer. So we're going to change that to vendor. And then we're going to click save. So we've added a new vendor called WB Investments. And then we're going to accept the date that's already given in the system somewhere. There it is. And that's step 5. And then step 6. Oh, let's see. Here we go. So we're going to get to the account. This is step 6. Add new from the drop-down list for account column. And we're going to add step 7, equity. For detail type, step 8, we're going to choose common stock somewhere. at the very top. I missed it. We're going to leave the name of it common stock, and we're going to hit save and close. As the payment method, we're going to select check, and we're going to choose 10,000 in the amount. Whoops, accidentally collapsed it again. All right, so here we're telling QuickBooks, add $10,000 to our checking. This is money received from WB Investments to the common stock account, meaning WB Investments is buying into our company, putting money into our company to become a stockholder. We received a check from them in the amount of $10,000. And let's see. Step 12, we're going to hit save and close. And that's it. Now we're going to record a payout to our shareholders, which is called a dividend, okay, by clicking Add New. So this is step 13, and it's a check. And then we're going to add a new payee. We're going to call that payee shareholders. That's step 15. Let's make sure it's selected as a vendor, and we're going to hit save. We're going to accept the payment date that's already in there. And then under category, we're going to select retained earnings. And the amount is $12.50. So again, what we're telling QuickBooks here is subtract $1,250 from our checking account, pay it to the shareholders, and record it to the retained earnings account. So it's going to actually be a reduction to our retained earnings account because we're paying out cash. So this is how we record paying a dividend, paying out cash to the shareholders. Step 19, we're going to hit save and close. And that is the end of the equity transactions section. All right, so we're going to move forward with the long-term debt section of Chapter 6. And long-term debt is what it sounds like. We're borrowing for long-term, which typically means more than a year. And so again, I'm going to walk you through the process of recording a long-term debt. So this will be to record the receipt of money from borrowing for long-term debt. So I'm going to go ahead. Step 1 is continue where you left off. Step 2 is click new and click bank deposit. So again, we're just telling QuickBooks money's coming into our account. And then we're going to select add new from the received from column on the add funds to this deposit section. So right here, I'm going to add new, and I'm going to put Bank of La Jolla. Make sure it's selected as a vendor. Hit save. We're going to accept the date that it already assumes for us. Step 6 is we're going to select notes payable from the account here. So notes payable just means a debt, a long-term debt that I owe. A note is actually a piece of paper that has all the terms of the borrowing on it. And so a note payable just means the note that is payable that we owe to someone else. We're going to show that we received the money as a check in the amount of $15,000. So again, this tells, whoops, I always do that, don't I? This tells QuickBooks that we are receiving a check from the Bank of La Jolla for $15,000, and it's increasing our checking and increasing our notes payable. So it's money that we've borrowed. Step 9, we're going to hit save and close. All right. So in step 10, now we're going to show paying back of a loan. So step 10, I'm going to hit new, and I'm going to record check. Remember, check is a way of telling QuickBooks money is getting paid out. Step 11, I'm going to hit add new, my payees, And I'm going to enter the name Bank of San Diego. Make sure it's a vendor. It already is, and click Save. So I've added that new vendor. I'm going to accept the payment date. That was step 13. Step 14, I'm going to select Notes Payable. And then I'm going to type 25,000 in the amount line. Then I'm going to add another one here, add new, and it's going to be an expense account. That's step 17. Step 18, we're going to select interest paid as the type of expense account. And then we're going to call it interest expense. We'll hit save and close. So now we've added the interest expense there. And we're going to type 1,000 in the amount box. That's step 20. All right. So now what we're telling QuickBooks is write a check. So $26,000 is going to go out of our account. And 25,000 of it's going to pay off a note payable. And 1,000 of it is going to pay an interest expense. So there's sometimes gets confusing is how do I know if the money's going up or down? And the answer is by the bank account I started with. So if I choose a check, that means I'm paying money out of the company. And so the cash in the checking account will go down, which means I'm paying off the note payable. If I had chosen bank deposit, that means my bank account was going up, which means I was receiving money from a note payable. So that's kind of how it's different than a journal entry. By choosing either a check transaction or a bank deposit transaction, that's telling QuickBooks whether or not your cash asset is going up, and the other account that you're using is either going up or going down. All right, step 21, we're going to hit save and close. And that's the end of the long-term debt section of Chapter 6. All right, and so now we have the acquisition of a fixed asset in exchange for long-term debt section of Chapter 6. What that means is we're buying an asset, and instead of paying cash for it, we're just paying for it with a note, like we got a bank note or something, a loan from the bank to pay for it. So to do that, we're going to add a new journal entry. All right, step 3 is we're going to accept the date that's already in there. Then we're going to come to the accounts, and we're purchasing a truck. So I'm going to put truck, original cost, and I'm going to debit the amount, which is $3,400. So this is steps 4 and 5. To choose truck original cost, and then step 5 is debit $3,400. That shows the asset truck going up because assets increase with the debit. And then we're going to select notes payable, and we're going to credit that $3,400. So the reason we have to do this is because before we were using either check to show cash was going out or bank deposit to show cash coming in. But in the case of this transaction, there's no cash changing hands. Instead, we just have the asset truck going up and the notes payable liability also going up, which happens with a credit. So we hit save and close, and we have recorded that journal entry. And that is it for Chapter 6. So I hope the walkthrough was helpful, and I hope it helps you be more successful as you move on to the case assignment for this chapter. As always, if you need help, don't be afraid to reach out.